This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russia has pledged to disclose more data about the volume of its fuel refining and exports after OPEC Plus asked Moscow for more transparency on classified fuel shipments from the many export points across the vast country, sources at OPEC Plus and ship tracking firms told Reuters. Russia is the only member of OPEC Plus which contributes to export cuts rather than production cuts as part of its participation in the group's agreement to curb supplies. Market analysts have struggled to verify the exact volumes of cuts achieved by Moscow. Deputy Energy Minister Pavel Sorokin made the offer to provide more information last week in a call with 6 ship tracking consultancies and price reporting agencies tasked by OPEC Plus to work with Moscow on the issue. 3 sources told Reuters.
China's crude oil imports in November fell 9.2% year-on-year, customs data showed on Thursday, in the first annual decline since April as high inventory levels, weak economic indicators and slowing orders from independent refiners weakened demand. Crude oil arrivals last month totaled 42.445 million metric tons, or 10.33 million barrels per day, BPD. According to the General Administration of Customs, the lowest daily rate since July and down from 11.53 million barrels of oil per day in October. Year-to-date imports by the world's largest oil buyer amounted to 515.65 million tons, or 11.27 million barrels of oil per day, an increase of 12.1% from a year earlier.
Moving on to the top news in the energy sector.
The United States is expected to add a record 33 gigawatts, GW, of production capacity this year, up 55% compared with new capacity in 2022, but growth is expected to slow in 2024 amid economic challenges, a report published on Thursday showed. The report by the Solar Energy Industries Association, SEIA, and Wood Mackenzie showed the U.S. solar industry added 6.5 gigawatts of new electric generating capacity in the third quarter, helped by record installation of residential solar. However, changes to net energy metering policy in California and elevated interest rates across the U.S. are expected to lead to a brief decline next year before growth resumes in 2025, the report said.
OPEC oil output fell in November in the first monthly drop since July, a Reuters survey found, as a result of lower shipments by Nigeria and Iraq as well as ongoing market-supporting cuts by Saudi Arabia and other members of the wider OPEC Plus alliance. The OPEC pumped 27.81 million barrels per day, BPD, last month, down by 90,000 barrels of oil per day from October, the survey on Wednesday found. Production had risen in the 3 months to October. Oil output from OPEC, which has been restraining supply with Russia and other allies since late 2022 to support prices, is set to drop further from next year after OPEC Plus agreed to a new round of supply cuts for the first quarter of 2024. Next, we have the top news in metal markets. China's iron ore imports in November climbed 3.4% from October, customs data showed on Thursday, as improved steel mill margins and a rebound in the yuan underpinned buying of the key steelmaking ingredient. The world's largest iron ore consumer brought in 102.74 million metric tons of the key steelmaking ingredient last month, up from 99.39 million tons in October, data from the country's General Administration of Customs showed. The volume compared to 98.85 million tons imported in November 2022.
London copper prices were flat on Thursday as traders refrained from making active bets in the absence of any major market-moving catalysts, while strong performances in the US dollar so far this week also weighed on the greenback-priced metal. 3-month copper on the London Metal Exchange held its ground at $8,284.50 per metric ton by 0347 GMT. The most traded January copper contract on the Shanghai Futures Exchange dipped 0.4% to 67,480 yuan, $9,423.26 per metric ton, rebounding slightly from the 67,200 yuan hit earlier in the session, the lowest since November 14.
We will now look at the top news in the agricultural sector.
China imported 7.92 million metric tons of soybeans in November, customs data showed on Thursday, rising 7.8% from a year earlier but lower than traders' expectations due to slower clearing of cargoes at customs. The world's top importer of soybeans was expected by some traders to bring in as much as 10 million tons last month, after large purchases of the oilseed from top supplier Brazil. However, customs is taking longer to issue import licenses than before, which has delayed the unloading of cargoes, said Yuyun Chen, trader with Ming Sui International, Shanghai, Trading Co. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.